All right, this week it's all about AI mania and inflation shocks, along with the Fed's next big move that is only a week away. With CPI and PPI data dropping this week, Tesla making headlines again. Who knew about that one? And Wall Street split on whether we're heading for a rally or a recession. Probably the most hated rally in the universe. But what you need to know is that this week's going to be crazy. But we're going to be breaking down stagflation today on the back of the table. We're also going to be talking about undervalued stocks and what actual worth your money investing in, along with the silent warning signs in the bond market everyone's really ignoring, that there's a little more things to come down the road. As always, we're going to discuss this together. So what do you want to start with first, inflation or Tesla stock?
I mean, I would say inflation. That is the big thing that's happening. I believe CPI is coming out this upcoming week, if I'm not mistaken, this week.
Yeah. So
Yes.
so basically with
June 11th.
Yeah.
June
So
11th.
we got the inflation report coming out. They're actually surprisingly expecting inflation to go up rather than down.
Really?
Plot
That
twist,
is
right?
surprising.
Plot twist of the century, where we're expecting the inflation number to go up, whereas we're seeing crude prices and various things during a period come down, right? So it's like, are we setting ourselves up for a massive rally, right? Like Tom Lee just came out. I don't know if you saw, but he said this is the most hated rally, even surpassing 2023 and 2024.
Why is it the most hated rally?
Because everyone missed it. Everyone was hell bent that the recession was coming. They were hell bent that Donald Trump was going to crash the economy. The Fed was going to have to come save it. That the Fed was going to cut 7 times. That they were all looking in this direction and ignoring what Warren Buffett has told us about fear and greed. Right when this thing broke to just to remind everyone, right? 3.
Yeah.
3. We got the whole slew of the alphabet from 0, like almost, what was it? 2 to like 15.
I think it was like 15. Yeah.
Yeah. We were always joking.
Every day was like a new number. It's just like it went from all the way to like the only thing that didn't hit was like 1. That's about it. And
basically with that, it was like, if you hit 1, we got real problems. But like, I don't remember the last time it hit 3. Like, throw in the comment section below, guys, the last time in living memory that this thing hit 3, right? Like COVID was barely a blip at like 10.
Yeah.
And then everyone was like, COVID and this, it's like the world's ending, literally ending, as the world wasn't really ending. So we went literally, again, from 3 to 70 in a month or half a month time span. And everyone missed it. Everyone didn't believe it. Everyone was saying that the dead cat bounce. They were saying all this crud. And then I'm looking at this, right? We're going to go back to the core, right? I'm like, this doesn't make sense because we never saw inflation pricing. We never saw tariff pricing, right? Because this is the month that everyone's crediting with the tariff pricing.
Mm-hmm.
Did we see crude go up in that time? No, crude fell off a cliff. Just to bring it up, right? You know, because I gotta beat this into everyone's head over and over and over again, is that crude prices. Oh, sorry. So with crude, basically, again, we can see like it broke the pattern. That's kind of basically confirmed. We're coming back to like the resistance area. But if we look at it on a month-to-month basis, this is what I always tell people. The May report, right? And we can see what crude prices were back in May of last year. So simply put, if the delta last month was this massive drop right here, comparative to the previous month, and we still are now lower,
significantly lower.
Yeah, well, we confirmed, right? So we didn't drop that whole thing in one day. We took a couple days to get there. But so we had the drop going into a March, heading into April, right? So April kind of caught this taper, but May had confirmed pricing, which then translates over into gasoline prices, which translates over to all this other stuff. And I'm looking at it, I'm like, that you were nowhere near the blue line. So you're not going to be anywhere near a inflationary point. So it's like, what's going to drive up, right? Like we talked about housing extensively on this channel. where we're like, okay, home prices have been going up, and you guys can see this for yourself on Redfin's price index. But I'm like, okay, like January, February, March, April, yes, the prices are going up, but it's going up by like 7K, a very small percentage of the whole
We're basically in a straight line.
But that's like the slow boiling frog thing. It's not necessarily like this massive inflationary wave, right? Like to see large jumps like they're predicting in this report for core to move even a little bit, right? Core is the most stubborn thing in the world. Jerome Powell has even said it himself. Core takes a very, very long time to play out. CPI is a more volatile one. And CPI jumping 0.2% from year over year, it's like, what's driving it? And
well, let's actually delve into that a little bit more, because I actually have the national average gas prices, and a year ago, guess what they were?
Like $4 or something.
$3.45. $3.45 a year ago. Today the average $3.13. So I understand that we're not exactly on the on like the 1 month to 1 month up, or like on the year, it gives you a general, because we're 8 days already into June, but it'll give us a pretty good overall view as to what it actually will be, and that's a very, very big jump. And if we take a look at, once again, what caused CPI to fall to begin with in the month of April. In the month of April, it was oil or energy. Energy fell 3.7%, and food just basically remained stagnant. But energy was the big driver. And if you're telling me that from a year ago, this is down even more, at worst, I honestly believe that at worst, the thing that may occur here is that inflation may come in on par with what it was.
And you're not even seeing a drop, right? Like the number you're building is basically not even a drop from 3. It's like 3.9 to 3.4. So you're not even having a major like stepping stone that like a number is dropping off from the year ago number to now. So it's not like where we were back here where it's like, oh, this was easy to get easy inflation numbers. You just have to be less than 7.67, right? So now it's like it's
going to get harder.
It's going to be harder to make progress.
Right.
But I would like to remind everyone, the Fed cut when we were not seeing progress. So what's changed? What's fundamentally changed about the data approach, besides who's in the White House? But this report, in my opinion, is setting up to be an epic failure. In the sense of
okay, go on, yeah.
In the sense of that, it's going to be undercutting this report significantly. I think you could see 2.7 possibly on core. I think you'll see 2.1 on CPI. I think it's going to be so screwy, right? It's so screwy with it that they're going to be like, everyone's expecting the same way they expected with the rally that wasn't going to happen. They were told that inflation is going to increase because of tariffs, and tariffs happened sort of not really.
90-day pauses here and there. Yeah.
It didn't sustain long enough.
Yeah.
So they're being told that. And then the question becomes, okay, so you were told that we were going to get a recession. You didn't get that. Atlanta Fed GDP, congratulations on being the new ADP of job numbers. And then I'm just like, I hope we get a print of that this week, because I love laughing at this. I think everyone should have a good laugh at the Atlanta Fed GDP. Oh, wow, we don't get any one this week. Darn it. I was looking forward to having a laugh this week. But then here's a bigger contradiction, right? Here's the next like throw a loop into everything. Not really wanting to get into PPI, but let's look. 3.1 to 3.0 on core PPI, but yet the PPI year over year is going up from 2.4 to 2.6. Thank you, Bizarro World. But yet this is the forward-looking one, and it's been going down. So it's like, is it not translating to CPI anymore? Is it basically the world's falling apart?
Yeah, it's starting to basically diverge, right? You're seeing one saying that things are coming down, and then the other one saying that things are going to go back up. I honestly disagree with you. I honestly think that this report it's setting up for another great massive rally. Honestly, now I know that you said 2.1 on the non-core. I see it more along the lines of like stagnant, staying the same around
like 2.3%.
Okay. Yeah, 2.3.
Either way, it goes up.
I mean, but you want to know something? You want to know something that we thought was going to be catastrophic, and yet you called it these past job numbers, because you said that it was going to be right in the middle of the previous and the expected, and it was. I think they were expecting 120, 125, 120.
Yeah, we can pull it up.
And the previous was like 170 something, and it came in at like 135, if I'm not mistaken.
Jerome Powell's probably pissed at this right here with the 3.9 year over year earnings. So he's like, "Damn it, they're earning more money. I need to crush them more. No rate cut for you." But then like manufacturing payrolls -8. I'm like, your economy shrinking into oblivion. But this one they revised down from 177, and then they translated it over a little bit into the non-farm to make it look a little bit, spit shine a turd. And the same way with this, revised from 167 to 146, the spit shine a turd, 30K over here. So just a transference, right? So all they're doing is playing this game of like what they really want to see. I was curious to see that unemployment actually didn't tick up, but it's like you're heading into the period where people are going to roll off of unemployment because the 6-month span is basically ending. So May is like the peak in unemployment, and then you kind of get into the holiday season. So you get more people going, kind of finding jobs because of holiday stuff. And then we're heading where it rolls over for the year in the following year, 6 months from now, is when the employment numbers could spike again. Yeah. But again, it's like everyone's saying about the jobs numbers that the Fed is like in this hunky-dory spot. Like, this is the good job numbers for them. I'm like, no, it's not. It's like, does nothing for them.
Well, okay, yeah, there you go. That's a much better statement. It's not that it's a bad jobs report, but it's definitely something that the markets do like, and we did see that on Friday after the report came out. I mean, markets gained like 1.2% on the day.
Oh, yeah.
So
they're like, wait, the economy's not completely falling apart yet. Rally. It's like
I'm very interested to see how the tariffs are going to affect the CPI, because if this thing comes in lower than 2.3,
if it comes in at 2, oh my God.
If it just comes in lower than 2.3,
what Elon did, the tweet storm that Elon did will pale in comparison to what Trump is going to open up on Powell.
Yeah.
He already started. This weekend talking about Powell.
Is he really?
Good. I have a sneaking suspicion that someone got a preview of the CPI report.
Probably.
Well, he does. We know he does.
We know he does. The BLS is under the executive branch. So
yeah, but Powell gets it 2 weeks. He gets it, I think, 3 days before.
So he could easily just executive privilege. Boom.
Yeah, it's like mine. But yeah, I think this report, like, there is a ceiling for bad news, where if it comes in line, that's like the ceiling, and the market's like, rally.
It came in line.
It's like, and then anything lower is just more honey, right? More honey on the biscuit, right? Just keep rally. Like Tom Lee said, it's going to be the most hated rally. And it's like, when you look at AI companies and what they're doing and how AI is basically turning into this like almost like efficiency mechanism, right? Companies are looking at like how they can implement it into like their daily lives. And then the one that this guy created, I was just reading about it recently, an AI where you can snap a picture of your food and it automatically tells you like the calorie stuff for it.
That's awesome.
Yeah. Sold the business for like $1.8 billion.
Whoa. That is cool, especially for somebody like me that I'm very, very health conscious and that kind of stuff.
And are slightly lazy when it comes to tracking.
It's pretty difficult. It's not difficult. It's just like portions. I could even tell you like the portions to just based off of like that's insane. That's awesome.
Yeah, he sold it. He sold the license to like so many people. So like all these like MyFitnessPal, Macro Factor, they use it now. And it's like, it's insane. Again, awesome. Your quote, do you want to be the one mining the gold or selling the shovels? Yeah. And I want to be the one selling the shovels.
Yeah. That will always get you the least amount of risk with the most returns.
Yeah. So it's like,
that's actually really cool.
And again, with NVIDIA coming out, right? So like Here's also NVIDIA, S&P, quick jargon about it, but the most hated, probably we're getting up to be what is going to be the most hated rally in the universe. I'm going to be talking more about it in tomorrow's video about it, but like we're less than 2% from all-time highs on the S&P, and the NASDAQ is like within literally 2%. So we literally CPI day we could be all-time highs.
We could, but here's the thing: when you say most hated rally, no, most hated rally. If you thought that the world was going to end, when here on the channel, what have we been saying the whole time?
Right? Buy more, buy more.
Basically, when things crash, guys, you got just stop. Because at the end of the day, if guess what, the stock market goes to zero, do dollars really matter at that point? So yeah, like if you just keep buying more and more and more, it really doesn't matter if dollars just become nothing, right? If the stock market goes to zero, our dollars do not mean anything at that point. No, so it's just better in general to just be invested. It really, really is. And we've been preaching on the channel. NVIDIA fell to $98. NVIDIA fell to $98. So more than that, right? UNH fell to sub 300, from 670 down to 300. AVGO fell from 255 or 262. I think it was the highest point, fell down to 146. You had the opportunity in a lot of companies. And what were we preaching here? Buy.
Yeah, everyone said.
I took advantage of it.
Yeah, everyone said Netflix wasn't going to go anywhere. Netflix $1,200 a share.
Netflix $1,200 a share.
Meta's about to break to new all-time highs again. It's like the only turd in the pocket is like Apple right now because of like the lack of innovation. We've covered Apple extensively on the channel, but that doesn't mean like one company can drag the whole market with it. Like look at Microsoft, right? Earnings turnaround, blue sky breakout.
Microsoft sub 400, and now
sub 400 now new all-time high. Now we're back right to a new all-time high. So like when everyone was telling you the world was burning, it's like just buy more and
we were here. Yep, we were here saying that. Yep. So,
and last but not least, VIX, right? Cratering back down to the sub-teens, right? Sub-teens breaking down further. So again, when everyone's telling you the world this week's going to be volatile, they're not buying insurance. So they're not expecting, right? If you were looking at this inflation report and you were seeing that this is going to be the inflation report to end it all, it's not being supported with it. So with that, guys, we're going to wrap up today's video. Make sure you are subscribed to the channel so you know when the next video is coming out. We're going to be doing a more in-depth analysis of CPI, PPI, and kind of like talking about the trades. They'll be coming out Monday, 4 p.m. Eastern Standard Time. So make sure you got the bell notifications on. Throw a like down on the video if you enjoyed this. And thank you so much for tuning in, and we'll see you in the next one.